Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Back on the line with us is Katrina Glogowski. She's an angel investor and attorney. We're going to be talking about cannabis as the venture capital market is buzzing. Firms are seeking to capitalize on the hype. Katrina, thanks for being back with us.
Good morning, Josh, and happy holidays.
Yes. So according to this article from pitchbook.com, the latest hyped industry is cannabis. In the U.S., venture capital dollars are beginning to pour into the space on the assumption that recreational use will eventually be legalized under federal law. But federal legalization might not actually represent the best possible outcome for all the cannabis startups and their investors. On more stable legal footing, these companies might not be able to survive the entry of legacy behemoths such as Coca-Cola and Anheuser-Busch InBev, among other big brands, evaluating opportunities in the cannabis space. Federal prohibition has ensured that a public listing in Canada was the only reliable off-ramp for investors, and that's starting to change as consolidation plays are developing statewide in some regions. And so, Katrina, you were at MJ BizCon. You were on a panel discussing transportation, internationalization, eventually legalization. And so, I mean, how does this kind of play into the part of hype, maybe overvaluations, and 2020?
Well, that's a loaded question, Josh. So let's start first with broad stroke legalization, call it federalization or federal tolerance. This is both a plus and a minus for the cannabis industry. It's a plus because banking, interstate transport will allow cross-border, cross-state border export and import when there's a shortage in one state and an oversupply in another. As we see Oregon suffer year after year with oversupply and nowhere to put it. But the downside to it is it allows mega companies like Coca-Cola and InBev to come in and compete on a national scale that's going to put the average mom and pop out of business. Now, as far as the second question, as far as transport and getting across the border, state border and international border, that's the future of the industry. Everybody forgets that cannabis is an agricultural crop. It is grown in the ground or in a container or hydroponically in a warehouse, but it is still an agricultural product, and it costs so much to manufacture, grow that product in areas where cannabis was never meant to grow. So ultimately, you're looking at concentration in traditional agricultural areas. And then the third piece, what's that gonna do to the industry? Only time will tell. If you have a comparison to alcohol, there's always craft breweries, there's always wine that people truly pay through the nose for and want and create a demand for. But ultimately on the shelf, Josh, people are concerned about price. If you continue the analysis with wine, most wine that is sold in the United States is less than $15. Mm-hmm. Yes, there are wines that go for thousands, but the majority of the wine is that middle price point. And so with federal legalization or federal tolerance, you're going to have to compete on that $15 type price point that we see in alcohol. And so do you want federal legalization or not? It's a double-edged sword there, Josh.
Mm-hmm. I think a lot of people are definitely planning on it. One of the questions I was asking is at the MJ BizCon in Las Vegas, I was asking, what do you guys expect to see in 2020? I got a lot of consolidation. And so one of the first ones to say that was Ashanti Hall with Blacktacular Events. And to my surprise, he was on top of it. Just being in events, he was even aware that there are too many companies. So it's not just people that are in business, it's people that are servicing and events and whatever. Everyone kind of sees this potential mergers and acquisitions, which PitchBook says that the sudden increase in cannabis M&A has prompted some industry observers to speculate about the direction that consolidation could take in the coming years. As the industry grows, investors are sizing up the threat represented by incumbents from big alcohol, big tobacco, big pharma. And so you can kind of see the number of deals. It may have been peak last year with 152 deals in 2018, totaling $7.3 billion. This year, we've seen 86 deals totaling $5.3 billion. And so with that might be forced mergers rather than capital coming from Canada and buying these up. It's going to have to be from the ground up this time for just the ability to be a going concern and survive another day.
We talk about this a lot. And we've talked about on the podcast before, the MSOs and trying to reduce your cost of goods sold by operating in multiple states, and call that consolidation, call that solid business planning, call that M&A, call that corporatization. But again, yes, cannabis is a crop, but it's also a business. And if you can't keep your cost of goods sold down, you can't compete, and you can't be at that sweet spot for the consumer. Again, with the wine, $15 or less. So you have to consolidate.
Consolidation in the emerging cannabis market makes sense for more vertically integrated players looking to expand operations into multiple U.S. states. Just like you mentioned, there's a lot of people that it seems like they're getting bogged down or distracted by other things rather than producing more SKUs and looking for vertical integrated opportunities. They still seem to think that they're going to be a legacy. And so kind of want to get your opinion on that in a second. This article says that the industry analysts argue that big alcohol, big tobacco, they're going to look to buy rather than build market share in cannabis. So a number of consumer brands have already made big bets on the industry. Last year, tobacco giant Altria became the largest shareholder of Cronos, buying 45% stake in the company. And Constellation Brands, the brewer of popular Mexican beer Corona and Modelo, invested over $4 billion into Canada's Canopy growth, increasing its stake to 38%. Coca-Cola and Anheuser-Busch have floated plans to produce cannabis-infused beverages. So knowing that, I'm not sure why companies aren't increasing their SKUs, looking to merge or become more vertically integrated with other companies and other regions. It just seems like there's a lot of distraction rather than solid business. And Henry Finkelstein of Cannabis Big Data had said in an interview with me at MJ BizCon that he thinks the professionalization of the industry, the normalization, is going to require a lot more tools, which is what he's selling. But he's right, though, in the sense that if these companies don't professionalize and normalize and look at tools, they're going to be left in the dust.
Yes, yes, and yes. Yes, we see corporations coming in without necessarily having the knowledge, background, or experience in cannabis. So they solve the problem by buying somebody who does. Yes, to having a broader range of products. I make pre-rolls. That's all I do. Okay, well, corporate America does not want to just buy somebody who makes pre-rolls. Corporate America wants to buy effectively a turnkey business with a broad number of SKUs because that's corporate America. Corporate America does not have one product on the shelf. And then yes, again, to your M&A and having a business plan to have a broad as possible market share for an attractive target for corporate America. So yes, yes, and yes, Josh.
So there's been some consolidation trends. Analysts anticipate major consumer brands could come to dominate the cannabis industry by riding a wave of consolidation largely of their own making. That would assume that existing M&A markets, they argued, particularly at the tails of the value chain where supply-glutted cultivators at one end and retailers at the other already exist. Smaller dispensaries ranging between $1 million and $5 million in enterprise value represent distressed assets to consumer giants making strategic acquisition plays. So definitely looking at people that haven't expanded as multi-state operators and they're really small, they're going to be like that low-hanging fruit, just ripe for any kind of downturn, whether that's real estate or stock markets or just pricing being a commodity. If you're not well capitalized and you don't have existing plays, whether that's multiple SKUs in multiple states, chances are you're probably going to be selling yourself to one of these giants. And it looks like the low-hanging fruit are going to be these smaller dispensaries that haven't taken the time to do that.
Agreed.
So meanwhile, companies with national ambitions in the U.S. are scouting for acquisition targets across several scattered states. As legal recreational sales started last week, California became an instant designation for M&A activity. Strategic investors closed 56 deals for cannabis companies. By contrast, Florida and Nevada trailed that figure significantly, accounting for a combined 33 completed transactions. In lieu of a national market, which may be years or decades away, cannabis companies are concentrating on dominating regional markets, particularly around major cities on the coast. Investors anticipate more regional hubs will develop over time as a result. And just like you were saying, Katrina, it's going to be in an area where you can actually grow. You're not going to force people to grow in a place like Florida, where you're going to have massive amounts of humidity and very poor quality. So I think it's going to have to become more of a normalized situation.
Agreed. We were talking about this at MJ BizCon. How can you cost effectively grow cannabis? Can you grow it in a greenhouse and pay for electricity and water? You certainly can. How does that affect your cost of goods sold? When you run around $2 a gram cost of goods sold in the Pacific Northwest, and you're competing with 5 to 15 cents a gram out of Colombia, how are you going to survive? And I do think it is going to be a regional, that the proverbial emerald triangle, where they've been growing for years. Once it gets normalized, once it settles down with the crazy regulations in California, it's cheaper to grow there. It's just cheaper to grow there than it is to grow in the Yukon territory. That's just nature. God bless Canada. I love Canada, but you don't grow avocados and bananas in Canada. You just don't.
You know, I saw at least 3 or 4 companies at MJ BizCon that are making manufactured equipment for pre-rolls specifically. There's some companies out there that won't do it because they think big tobacco will make it. Like this article, I would agree that they're going to buy it instead. And so with that equipment, $300,000-$400,000 for these machines that will roll 3,600 an hour, hands-free, fill it, weigh it, twist the tops, all of that. It's really going to change the game in the same way that the international markets will. So you had mentioned Latin America. There's a lot of Canadian companies that have business in Latin America. And the U.S. companies, if they aren't able to keep up with the 5 or 10 cents a gram, whatever you're guessing that Latin American price will be, those American businesses and all the capital raises they've had will be worth nothing. And I will make the analogy that Canada has the same issue to deal with right now, because as prices in the Canadian markets, those top 4 LPs are expecting $1.74 per gram. When all of the consolidation happens in the U.S. and companies go out of business, we always see 7 to 8 cents a gram, or at least the last 3 years, as companies just kind of give up. And so if that is the final price, which I think it will be, because we've seen 420 prices become the everyday normal low day price 2-3 years later. I'm assuming that these 7 and 8 cents gram going out of business sales will be the everyday low price out of Latin America. And so if everyone's not prepared for that, they just shouldn't even be in business.
One of the guidelines for investors in the cannabis market I am not a broker. This is not advice. I'd be looking for less than $1 for your cost of goods sold, especially, for example, on a pre-roll. It is difficult when just the cone costs 3 to 4 cents. Then you got to put a tube, you got to put it in a tube or some other type of packaging, and you have to put all the labor into creating it, either through a machine or by hand. Then you got to put all the state disclosure requirement stickers on it, and then you haven't even talked about the cost of cannabis, and trimming the cannabis and preparing the cannabis for that pre-roll. You really need to be focusing on getting it less than $1. And I've heard that magic number of $1 over and over and over again. And that's going to be for the premium. That's not the 7 cents. That's not the 8 cents that you're going to be competing with. And whether you do that through massive automation, whether you do that through massive consolidation, so that you only have to buy one of these giant $300,000 machines, or if you do that through verticalization so that you can control the cost of the flower, and you can control the cost of the processing, and you can control the cost of the retail, you're going to have to do something. And if you can come up with that magic dollar price point, that makes you very attractive, number one, to investors, but number two, for takeover, because that's the dollar amount that corporate America is looking for. And if you can replicate that dollar cost of goods sold, you're already way ahead of everybody else, however you do it from the three ways I just mentioned. But you have to control the price, and that's all corporate America cares about. Is they have shareholders to report to. They want to give dividends. What are their profit margins? I have the perfect bud, and I'm going to charge $32 a gram for this perfect bud. Not in corporate America.
Brian Yager of Lemon Haze had made an interesting prediction that he thinks that federal legalization will start to take foot next year, meaning companies are going to start planning for that eventuality. And so the ones that are still worried about shapes and colors and trying to figure out, how to have products that aren't attractive to children, and they aren't thinking about multi-state and IPOs and mergers and legalization, they're just so inundated with just trying to operate day to day. Those are going to be the ones that are going to be easy targets for consolidation. And so as the cannabis industry matures, clarity around banking and tax regulations would fuel deeper industry consolidation. Cannabis-related consulting, software, and other ancillary companies will make intriguing acquisition targets. Other M&A targets are in areas such as lab, strain testing, services used by recreational medicinal markets. I would also say automation, of course. And then ancillary products, like the toker poker and certain things that haven't really been around for the last 4 or 5 years due to the lack of capital for products that may or may not work.
Right. The ancillary market is often overlooked. Just because you have cannabis, how are you going to consume that cannabis? If you're going to put it in a chocolate, you need a pretty expensive chocolate mold injection machine. If you're going to put it in a pre-roll, how are you going to make that pre-roll? Somebody has to make it. If you're going to make it into oil, those extraction machines are hundreds of thousands of dollars. But even simply, you're going to smoke it. Just as a flower, you're going to smoke it. Okay, well, the days of converting an apple into a bong, they're long gone. So how are you going to actually consume it? And there's not a lot of M&A activity in that ancillary market to control the delivery of the device, of the cannabis.
Mm-hmm.
And I think that's where you're going to see safe corporate America go first. Look at Scott's Miracle-Gro. Yep, use it on your roses. Yep, they have an established brand. Everybody knows Miracle-Gro. If you talk to a casual grower, they use Miracle-Gro. It's safe on the plants, and you can consume it and not worry about testing hot. And you can buy it at Lowe's with a Lowe's credit card. Literally, now sometimes getting your supply can be difficult for cannabis companies when you don't have a credit card or when you don't have a bank account. It's hard to buy these things. So Scott's Miracle Grow is a perfect example, and their market share is just going up and up and up and up. And they have very little to do with cannabis.
Some investors, encouraged by the growing interest of major consumer brands, anticipate that larger funding rounds eventually will be met by similarly significant exit values. In 2018, corporate acquisitions in Canada averaged $115 million per purchase, an increase of 5.5 times year over year. Likewise, the rapid expansion of the recreational markets in the U.S. buoyed transaction sizes in 2018, with the average M&A deal climbing by 85% to almost 22 million. But that dynamic may not materialize at scale. The U.S. has already posted record levels of VC-backed exit activity so far this year. In aggregate, these transactions surpassed the $2 billion barrier for the first time. Records aside, that's not an impressive statistic compared to other venture-heavy sectors, which routinely see single exits valued higher than the entire cannabis industry put together. So we kind of have this conversation a lot where it's normal for another industry. The failure rates in cannabis are actually not as high as they would be otherwise. And so we haven't even seen that failure yet. We will. And so it'll probably match that of restaurants. 85% will fail. And so I would expect to see that in the near future.
And Josh, I'd like to comment on this. We've commented on some of these articles before. So this statistic is quite skewed, where people were rushing in to buy anything that they could in Canada, disregarding of price, because they just had to get in. They would pay anything to get in. Then you see the exits. The exits in Canada are also skewed. We have not even had a full 24 months of Canadian legalization of data. Huge entries, huge exits. The massive amounts that Altria and Constellation Brands are putting in are not realistic numbers. They just, what we were saying earlier, they just bought their way into the market at any price. That doesn't mean it's a valid price. And now, panic in Canada, panic in Canada. How about price normalization in Canada? Now that the market is maturing, 2 years, who would ever say that's mature? No one, but it is maturing, and the price is normalizing. Now look at the US, same thing. I have to be in 20 states as soon as possible. I don't care how much it costs. I'm going to take my brand, MedMen, into as many possible places, and I don't care how much it costs. I mean, all you're seeing here is normalization. And so when I see articles that mention these types of statistics, it concerns me, and I think it can be misleading to an investor or to a consumer. This is a business. It's a new business. It's a growing business, but it is a business. And people forget that.
Yeah, this article says that there's a disconnect between industry excitement and the exit numbers. As things stand, U.S. companies have an opportunity to capture a larger geographic footprint as more markets emerge and multi-state operators position themselves to serve a much larger consumer base. But the question isn't how big the market opportunity will be. It's whether today's cannabis companies will be able to take advantage of it. And I don't think they will. I don't think most of these companies are in a position to take advantage of that. For when that position happens, they're just too worried about day-to-day activity and not looking at the bigger picture.
I think that there are a handful of companies planning for one of these huge takeovers. I can think of a few off the top of my head. Northwest Cannabis Solutions. They put a lot of money into automation. They expanded smartly, and they have a very high valuation for a reason. Now compare that to a little craft farmer in Omak, Washington, that grows 2,000 pounds a year. You are never, ever going to compete with Northwest Cannabis Solutions because you can't. You don't have the capital. So how are you going to stand out in Omak, Washington on the national stage? With your product, your $32 a gram precious little bud? No. With technology, with M&A, you're going to just take over 10 or 12 farms over in Eastern Washington, so you're attractive to an M&A acquirer? Are you going to say, I have my cost of goods sold down to $1? That makes it attractive. How are you going to be attractive to someone in corporate America? Mm-hmm. And I don't think a lot of people are. A lot of companies are not. Branding. We've seen so much about branding in Washington because in Washington, you walk into the store and you can't see it, taste it, touch it, smell it. So you can only look at the package and make a decision based on the package, which I think is wrong, but that's what we're stuck with in Washington. So we've seen so much about branding in Washington, but if you're going to be acquired by Coca-Cola, then Coca-Cola is going to be selling Coca-Cola products, not necessarily, Uncle Bob's best weed ever. So think about the branding, think about the cost of goods sold for your company, and set yourself up to be an acquisition target. And there's a variety of ways of doing that.
There's a lot of people who spend money on packaging, and yet the number one question is, what's the highest THC at the lowest price point? So I don't know if you can see this packaging here. I took a picture of it, and all you can see is the sticker on the back, because that's what the bud tenders did, is they just took it and they saw what the THC percentage is, and that's how they hang it up. So you literally have no brand, no name, nothing. So when I walk in, I don't know who that is. I don't know what company it is. And so I'm not going to ask, oh, can I see that brand? Because it's just not even, you can't even see it. So very new industry, still fairly ridiculous. Lots of things that need to change and progress and grow in order for this to be a real industry where people are treating it like a commodity. And so I think there's going to be a huge amount of pain in 2020 for most companies. But again, that's going to be an opportunity for the rest of us who are sitting back, kind of looking in outside of the bubble, rather than just inundated by day-to-day activities and unable to, lift your head out of the sand and grab some fresh air.
Josh, I'd like to agree with that statement, first of all, but second of all, give a comparable in the hemp industry. There's a canola oil plant that went defunct down in, I don't know, the middle somewhere, Oklahoma, Alabama, and a gentleman saw the opportunity to take over the entire plant. And all of the equipment was present in the plant, needed a little bit of work, a little tune-up, a little bit of cleaning, but still all the equipment was there. Now, this gentleman, fast forward, has made that capital investment, which wasn't free, of course, but still was able to get even tax credits in the locality where he was located because he brought jobs. And now he can process millions of pounds of hemp a day, repurposing an existing factory. Who's going to be the one that Cargill comes in and acquires? Uncle Bob's best hemp with 2,000 pounds and a rosin press, or the repurposed canola factory processing 1 million pounds a day?
Mm-hmm. Exactly.
Be smart.
Yeah, there's so many examples you can look at. The coffee industry, the recent hemp, decline in price due to agriculture. There's so many other industries that you can look at to see, where the future of cannabis is going to go. And if you have no idea what I'm talking about, then just come back to the Talking Hedge. I'll tell you all about it. So with that, we're going to roll this one up. I'm Josh Kincaid. I want to thank my guest, Katrina Glogowski. She is an angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
This is the Talking Hedge. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't. And I'm out.
If you enjoy the content, please show your support with the cushy gesture of $4.20 a month on the Talking Hedges Patreon page. This will kind of help you spread the word. I've been asked to speak all over the world, from Toronto and Colombia, Spain, Miami, all over, Tokyo. But your support's important to me. I haven't monetized the podcast. I want to be as authentic and transparent as possible. I want to avoid conflicts of interest or even the perception of paid opinions. So don't forget to like, share, and subscribe, or pay me on the Talking Hedges Patreon page, or don't, and I'm out.